Ever wondered how some traders get to trade massive accounts? 50K, 100K, even 200K without using their own money? That's what prop firm trading is all about. You get access to a big trading account, but first, you have to prove that you can trade with discipline. That's the deal. If you can manage risk, follow the rules, and show consistency, a prop firm gives you their capital to trade, and you get to keep most of the profits. It sounds simple, but there are rules, traps, and hidden details that most beginners don't know. And that's why most traders fail before they even understand how this system really works. So today, you'll learn exactly what prop firm trading is, how these firms operate, how you can get funded, and what to avoid along the way. By the end, you'll know exactly how to start and how to avoid wasting your time and money. Let's get right into it. How prop firms actually work. Prop firms are simple in concept. They give you access to a big trading account. If you can prove you can trade safely. Think of it like this. If you trade your own 1K account and make 10%, you earn $100. But if you trade a 50K account and make the same 10%, you make 5K. Same effort, same strategy, just more capital. So how do they test you? Through what's called an evaluation phase. Most prop firms use one of two systems, either a one-step challenge or a two-step challenge. In the first phase, you're given a demo account. You have to hit a profit target, usually something like 10%, but you can't lose more than a set amount in a single day, and you can't go below a total loss limit, often around 5% daily and 10% overall. If you pass that, you move to phase 2. There, the goal is smaller, usually around 5%, but the same rules apply. No breaking the limits. No blowing up the account. Once you pass the evaluation, you get what's called a funded account. That's where you trade real capital, and if you make profits, you get to keep a percentage, often 80% or more. Some even refund the challenge fee after your first payout. But every firm is different. Their rules, their drawdowns, their payout policies, all slightly unique. So before joining, always read everything carefully. Next, why most traders fail. You've probably seen the numbers before. Less than 10% of people who take a prop firm challenge pass it. And even fewer, maybe around 2%, ever make a payout. The reason is simple. They trade the evaluation like a competition, not like real capital. Think about it. If you're trading your own 50K account, would you risk 5K on a single setup? Probably not. But the moment traders see the demo label, they start gambling. They forget that the challenge is designed to test discipline, not aggression. That's why the biggest mistake people make is over-leveraging. They take huge positions just to hit the profit target faster. One small move against them, and boom, they're out. The second mistake? Ignoring the daily drawdown rule. It doesn't matter if your overall trade was right. If you hit the daily loss limit, you fail instantly. Another one, trading during restricted news. Some firms block you from entering trades around high-impact economic events. Always check which news is restricted. Usually it's only the major ones, interest rates, CPI, NFP, things that cause volatility. And sometimes it only applies to the instrument that's affected. For example, if there's news about oil, it might not affect you if you're trading Forex or indices. And finally, traders forget the simplest rule, holding positions overnight or over the weekend. Some firms allow it, some don't. And with some, overnight is fine, but holding through the weekend can break the rules completely. One simple oversight, and you lose everything. If you're getting value so far, hit that like button and subscribe to my channel. It really helps the channel grow. And if you want my list of the best prop firms with exclusive promo codes, check the link in the pinned comment. That link also supports my work, so I appreciate you for using it. Next, choosing a good prop firm, the 3-step filter. Now let's talk about how to choose a good prop firm. Because picking the wrong one can cost you more than just money. It can cost you your time and your confidence. Here's a simple 3-step filter I recommend. Step 1. Reputation. Always look for firms that have been around for a while. See what real traders are saying about them. Check if they actually pay out. Reviews from real people, not fake comments, will tell you everything. Step 2. Profit to drawdown ratio. This is the most underrated factor. If one firm asks for a 10% profit target with a 10% max loss, and another asks for 10% profit but only gives you 6% total loss, guess which one is easier? Exactly. You want the one that gives you more breathing room. That's how you survive long enough to pass. Step 3. Payouts. A firm that pays quickly, automatically, and transparently. That's a green flag. Fast payouts mean they've got the systems in place. And clear payout policies mean they're confident in their business model. If you ever see a firm taking weeks to send your payout or always asking for extra verification, that's a red flag. And again, if you want to check trusted prop firms with great payout reputations, the link is in the pinned comment. Next, how to spot prop firm scams. Now let's talk about the bad side. There are legit prop firms, and there are shady ones. And the shady ones can look very convincing. Here's what to watch out for. Hidden fees. Sometimes, firms say the challenge fee is the only payment. But then they charge processing fees, renewal fees, or data feed fees. Always read the fine print before you pay. Unclear profit splits. If you can't easily find what percentage of profits you keep or how payouts are calculated, walk away. A good firm shows everything clearly. Poorly written or vague FAQs. If their website doesn't explain things like drawdown, daily loss limits, or payout rules in detail, that's a problem. A vague website full of promises and few details. You'll see phrases like revolutionary model or fastest funding ever, but no actual examples, proof, or real traders. AI-generated photos or fake testimonials. If everyone on their website looks like a stock photo or their CEO picture can be found on Google Images, run. And of course, no verified payouts or no real people behind the company. Legit firms don't hide behind fake names or empty profiles. You should always be able to find who's running the show. The moment you see these signs, save your money and your energy. Next, how to actually pass a prop firm challenge. Here's the part most people skip. Everyone talks about what a prop firm is, but few tell you how to actually pass. So here's the formula. First, understand that it's not a race. If your target is 10% and your max daily loss is 5%, you can't afford a rush. Aim for 1% a day. At that pace, you can hit the target in just 2 trading weeks. Slow and steady wins this game. Second, manage risk like your life depends on it. Because it does. If you lose 5% in a single day, you're out, even if you recover the next day. That's why you should never risk more than 0.5% or 1% per trade. Third, stop overtrading. Most traders fail because they get emotional after one bad trade. They chase losses. They double the lot size. And that's the fastest way to fail. Fourth, focus on consistency. Prop firms love traders who trade with discipline. You don't need to win every day. You just need to protect your account like it's your business, because it is. And finally, trade your challenge exactly how you'd trade your funded account. If you treat it like a game, you'll lose. If you treat it like real money, you'll win. Next, the hidden advantage, what prop firms really want. Here's something most traders never realize. Prop firms are not your enemies. They don't want you to fail. They make money from consistent traders. Every trade you take gives them valuable data. They study your risk habits, your entries, your management. And when you're profitable, that data becomes gold. They can copy your trades, hedge your trades, or simply use your style to build their models. So the goal isn't to outsmart the prop firm. The goal is to trade in a way that makes them want to keep you forever. Because when they trust you, they give you more capital, faster payouts, and sometimes even private accounts. Next, scaling up and staying funded. This is where the real magic happens. Once you're funded, some firms will let you scale your account as you hit milestones. For example, start with 50K. You hit 10% profit safely without breaking rules. They bump you up to 100K, then 200K. Soon, you're managing more than you ever imagined. And the best part? You didn't risk your own money. But here's the catch. Staying funded is harder than getting funded. Because now emotions kick in. When you know there's a payout waiting, greed starts whispering. That's when you have to remind yourself. Stick to your plan. Stick to your system. Stick to your risk. Your goal is not to make money fast. Your goal is to stay in the game long enough for the profits to compound. Prop trading is one of the greatest opportunities a trader can have today. But it only works if you approach it the right way. Understand the rules. Choose the right firm. Avoid the traps. And trade like you already own the account. If this helped you, hit that like button and subscribe for more. And remember, the list of the best prop firms with promo codes is waiting for you in the pinned comment. That's also the best way to support my work. You don't need luck. You just need a plan and the discipline to stick to it. Keep studying, keep trading, and I'll see you in the next one.